This is Joe Baker with Trade Pilot. I want to go over a few things with you guys. First of all, you have to be very careful in this market. We had another Hindenburg omen come in on the 6th, and I think we had some confirmations again on the 8th or 12th or what have you. But at any rate, if you want to know about the Hindenburg, I did a video on that the last time we got one. I think the market dropped about 11%. So those of you out there that are holding stocks, you got to be very careful. There's a lot of things out there that, well, in the mortgage industry, I actually used to be heavily involved in the mortgage industry, and we have these option arms that are resetting, and a lot of you probably already know what those are, but those are the negative amortization loans where the balance of the loan increases. You pay like 1%. I'm sure you've seen the ads. What it is if you, let's just say your balance, your fully indexed payment would be $3,000 a month. That would be your principal interest, and the lender will charge you say $1,200. The difference goes on the back end of that loan. So what it is, the lenders are actually getting paid. They're booking the profits as if this is a performing loan. Meanwhile, the balance, let's just say on the home, goes from 400,000 up to say 500,000, and the home is worth 350 when it resets. So this is something that nobody knows how big the losses are going to be. I've heard things of anywhere from 65% of all homes in California are financed that way, and they actually come due in 2009. So this could get much worse than anybody ever imagined, even myself. So that being said, we're taking trading day by day, and we're using our dynamic levels and our static levels, which is our static levels are the ones that we come up with prior, before the trading day, and then the dynamics are as the trading day progresses, because there is so much news coming out about this mortgage mess and about these losses. And the Fed is, they got $800 billion at their disposal. I think they've used 400 of it already. These lenders are actually passing bad paper to the Fed just to hold on to it for the time being. Ultimately, they're going to have to take it back and do something with it. I've heard Wells Fargo has somewhere about $80 billion in equity lines that they haven't kind of taken a loss on. They don't know what to do with it. So there's a lot of bad news out there, and a lot of people know about it. I've known about it because I'm in the industry. Of course, I'm going to know about it. But if you guys don't understand the severity of what's going on, for those of you that are holding overnight or long term, you got to be very careful. So what I'm going to do is I'm going to start giving you some levels. I'm going to try to do this every night, and what we're going to do is we're going to look at the levels for tomorrow. I don't know if you can see this, but what we've got obviously is on the upside to the S&P. We're looking at 1338 for the high end, 1334, 1329.50, 1324.50, 1320.75, and then 1317. Right now, currently, we're trading at about 1317. Those are the upside pivots. So it's 17, 20, 24, 29, 34. Okay, these are levels I want you to just keep in mind, jot them down. These are obviously the futures. So if you're looking at the cash index, just take the fair value and do the math on that. They post the fair value every morning on CNBC. That's the difference between the cash and the futures. Then you've got to the downside 1309, 1304, and 1299. Okay, then what we have is we usually do what we call our breakout trades, and a breakout trade will be if the market is either strengthening or weakening the typical range it will go in. So that buy signal is going to come in tomorrow at 1322.75, and if it hits that level, there's a good chance, about a 75% chance, if it gets in that zone, in that range. You can't just hit it and expect it to come right up, but if it gets in that range and stays in that range, and we use them for all the other indexes as well, it'll go to 1332.50. So that's our upside breakout. The downside breakout will come in at 1312.75, and then the target would be 1303, which is just below the 1304 pivot level. So that's doable. We are very oversold. However, we are in the Hindenburg, which again, you can just go back and hit. I think, like I said, I did that probably last November. We had when we did fall quite a bit. We have fallen since the Hindenburg has, has presented itself. But you just have to be very, very careful because of these large losses that these lenders are taking. Like I said, they don't know what they're going to be, and these things aren't even going to start resetting until, late '08, early '09, and they're going to be resetting continually for the next 5 years, guys. So this could get a lot uglier than any of us ever imagined. However, if the banks and the Fed can cover the losses, bury them like Wall Street's so good at doing, we won't know anything about it, and maybe we'll get right through it. Who knows? Nobody knows, and I can tell you that right now. Nobody knows. So we just take it one day at a time. That's why we use our levels, and I'm going to show you here. This was our morning with our yen, and again, what the yen does, a lot of big money comes out of the market and buys the yen for protection, or if there's something they're seeing in the market. And so obviously it's large players. That's why we want to be on the side of what they're doing. As you can see, these signals were phenomenal early on. I told you they're great pre-market and they're great during the market, but this is even your pre-market. You went from around 25 down to 20. That was the first trade right around 4:45 a.m. Eastern, and then you went up at about 13:22 till about 13:26, 27 area. Another nice trade. Came back down from 13:26 down to about the 13:20 area. Another nice trade. Guys, this yen is so powerful. Another buy signal came in at about the 13:20.50 area, went back up to that 13:27, 27.50 area. Another sell signal came in right on the open, 13:27.50 area down to about 13:18, guys. What that lower level is the yen itself. And what I'm trying to show you is that it's very difficult if you're just looking at the yen to decipher what direction it's going. It's very, very difficult because it trades in it trades in pips, and scaled to the S&P, that's what our indicator does. So it will give you the buys and sells based on the pip changes of the yen. The next that's with our pivot indicator on there, so we kind of knew where the levels were going to hold. We were looking at that 13:20.50 area was a area of support. That's where that red line is. So I'm going to wrap this up because I only get about 10 minutes anyway. But guys, I want you to be very careful. This could get uglier than we think. We do have a bounce coming in because we are so oversold. So if we do get this bounce and you are holding stocks and you do have a portfolio that's a little bit underwater, you may want to peel off some of those losses, or peel off some of those, if you're in losses, peel them off as they appreciate during this next bounce, and maybe protect yourself. All right, take care, guys, and I'll see you tomorrow.